Join us tomorrow on Market Call. We'll have Dennis De Silva on the show, Senior Portfolio Manager at Middlefield Group. He'll be taking your questions on Canadian resource stocks. Let's talk to Lisa, who is in Toronto. Good evening.
Hi, thanks so much for taking the call.
You're welcome.
I've been holding American Tower, and it rebounded after the way it dropped in the springtime. And I just wanted to know if it's still going to go up. Should I continue to hold it for the long term or not?
Sure.
Thank you so much.
So Lisa, American Tower was a position that we owned for a long time, and we owned it, one, because of the growth in the industry. They operate towers, but second, because they were converting to a REIT, which of course, they've gone through. Now, in the spring of this year, the whole REIT sector, on the back of fears of rising interest rates, sold off because of their tight correlation to what happens to interest rates. Many of them have bounced back since, but it's in a part of the market that is less economically sensitive, and so as a result, the REITs are somewhat underperforming the rest of the market. We have a low exposure to REITs. Even in our income portfolio today, it will be 6 or 7%. We are more focused in industrial REITs where, a stronger economy means they get higher rents and higher capacity utilization. So it's a little more attractive. I think that ultimately this is a great company and it will do well over time. It's for an investor who's not looking for, equity-like returns. They're looking for more income-oriented returns. They should get good dividend growth as things go along. It's performing well relative to the REIT sector. So if you want a REIT, I think it's a good one to be in. Digital Realty is another one, DLR. They have data centers. But I think that there probably are better sectors if you're looking for equity growth than the REIT sector right now. The thing about equity investing is you always have to identify where the leadership is and focus your portfolios in those areas. And you can do well, but if you're in a bull market and you miss the leadership groups, it can have a big impact on your returns over time. So I think you always have to be looking forward to say what next. And our view is that with the economic data getting a little better, money seems to be working its way towards things that are a little more economically sensitive, like the industrials. We'll talk about a couple of those today.
Okay, David, let's look at an email on Lyondell-Basell. This is from Lynn. Can you give us an updated assessment at current levels? I think this was a top pick of yours a while ago.
Yeah, this has been one I think we've talked about twice in the last year. This is a great example of what we look for, good getting better. This is a company that's in the chemicals business. They have a large business in the U.S., and they've been doing very well. The big win for the chemical industry in the U.S. right now is that one of the biggest feedstock costs is the cost of natural gas. So, of course, you got this boom in oil and gas production, lots of natural gas in the U.S. that's locked there. And so relative to Europe and the rest of the world, gas prices are very low, which means their input costs are exceedingly low. So Lyondell has been benefiting dramatically from that. But now the next leg is coming because Europe is getting a little bit better, so their business in Europe is improving. This is a company that spins out a ton of cash. And there is a catalyst because we likely see, relatively low natural gas prices for some time to come. So we have pretty good exposure to chemicals. I would continue to buy it today. And we own, as we do, added other chemical companies along the way. And it's a reasonable exposure, especially in a world where the industrial economy is getting a little bit better.
Here's a phone call from John, who's in Richmond Hill, Ontario. Hi, John.
Yeah, gentlemen, good evening. I want to ask David about Alcoa. What do you believe? It's a hold or buy? Thanks.
Okay. So in general, we are not big fans of the metals industry right now because there's been a lot of capacity that's been built over the last few years, and China slowing down has an impact. That being said, Alcoa is in a unique position because they've gotten rid of a lot of their commodity business and they focused on specialty products. So they really have changed this company so it's more focused on some higher margin products. So it's one that you could own. About 50% of their business comes from the U.S. We are more domestically focused right now, U.S. focused. Asia is a very small piece of their business. So it's one that you could own if you want exposure to basic materials. We prefer to focus on chemicals than metals, but certainly it's performing well.
An analyst at Nomura today had a note on Alcoa, cut the earnings estimates in half, said that there are significant downside risks and that, what was the key phrase, that London Metal Exchange aluminum prices are in free fall, quote unquote. Does that make any sense to you?
I think you need to be very careful in general with metals. Mm-hmm. In China, 48% of their GDP last year came from fixed investment, building stuff. And that is unsustainable. So as they start to pare that back, and increased spending has not had a positive impact on the economy, so they're not getting any transmission from that. So if you think that that is going to slow down and there isn't enough consumer demand to pick up the difference, then the metals companies in general could have a difficult time. And people talk about the fact that copper's backed off in price, the metals have backed off in price. Copper was 60 cents. It's still $3. You know, it can come down a fair ways, as can the other metals. So I just think you just need to be a little careful with the metal stocks. We've been in a bull market for commodities for the last 12 years. Last 18 months has been a transition. I think that there is some risk in these companies in general for the sector.
Okay, David, a short pause here and more questions on the other side. Stay tuned.